Today, we hear from one of the best traders in stock market history. Jesse Livermore made $100 million in one day in 1929. Let's hear the story from the master himself. Enjoy.
I want to tell you something that nobody in finance will ever tell you. Not the books, not the courses, not the YouTube channels with their glossy thumbnails and their perfectly trimmed charts. I made $100 million in a single day. The 29th of October 1929, Black Tuesday, the greatest financial collapse in American history. While every banker on Wall Street was jumping from windows, while men in three-piece suits were weeping in the streets, while fortunes that had taken lifetimes to build were vanishing in hours, I was on the right side of it. I had shorted the entire market. I had bet against everything. And the market paid me $100 million for being right. $100 million in 1929. That is over $1.5 billion in today's money. And within a few years, it was gone. Not taken from me, not stolen, not lost in another crash. Gone because of me. Because of things I knew better than to do. Because of rules I had written myself, rules I had paid for with blood and bankruptcy and years of poverty. Roulette, I looked straight in the eye and broke anyway. That is what I want to talk to you about today. Not how to make money. You can find that lesson anywhere. I want to talk about why people who know exactly how to make money still find ways to destroy themselves. Why knowledge is never enough. Why the market is not your greatest enemy. Why the thing sitting between your ears is. My name is Jesse Lauriston Livermore. They called me the Boy Plunger. They called me the Great Bear of Wall Street. They called me a genius. They called me a reckless fool. I have been all of those things at different times and sometimes on the same afternoon. I started with $5, not 5,000, 5. I was 14 years old, working as a board boy in Payne Weber's Boston office, posting stock prices with chalk, while men twice my age tried to read what they meant, but I wasn't posting numbers. I was memorizing them. I was watching patterns form before I had a word for what patterns were. I was seeing the rhythm of the market the way a musician hears a song not note by note, but as something that breathes. By the time I was 15, I had turned that $5 into over 1,000 in the bucket shops of Boston. By 20, I was barred from most of them because I kept winning. Let me tell you what a bucket shop was, because it matters. A bucket shop was not a real exchange. You weren't actually buying stocks. You were betting on whether the price would go up or down. No ownership, no certificates, just price movements and your ability to read them. It was pure speculation in its most naked form, and I was extraordinary at it. But here is what I did not understand yet. I was not extraordinary at the market. I was extraordinary at reading numbers in the short term. I could feel a move before it happened. I could sense momentum building the way you sense a storm before the clouds arrive. I was extraordinary at the tape. The tape and the market are not the same thing. The market is something deeper, slower, more patient, more ruthless. The tape shows you the ripples. The market is the tide. And when I moved from bucket shops to real exchanges in New York, the market introduced itself to me the only way it knows how. It destroyed me. I lost everything in my first year on the New York Stock Exchange. Not because my instincts were wrong, but because the rules were different. In a bucket shop, you could get out immediately. Your execution was instant. On the real exchange, there were delays, there were spreads, there were operators, and the powerful men who moved markets. And they moved against you the moment they smelled weakness. I went broke, completely broke. I had to borrow $40 from a broker just to get back to Florida. And on that train ride south, broke and humiliated and 21 years old, I made a decision that would shape the rest of my life for better and worse. I decided I would go back, and I would not stop until I understood not just the tape but the market itself. What followed was the most important education of my life. Not from books, not from mentors, from losing, from being wrong in ways that cost me everything and then sitting with the wreckage and forcing myself to understand why. Here is what most people do when they lose. They look outward. The broker was crooked. The tip was bad. The timing was unlucky. They find something outside themselves to blame, and then they carry that blame with them into the next trade like a shield. But that shield is made of paper, because the next trade will test them the same way, and the one after that. The market does not care about your explanations. It does not accept appeals. It does not grant exceptions. It only moves, and it only asks one question. What did you do? I learned to look inward. Every loss was a confession. Every failed trade was the market showing me something about myself that I needed to see. And what it showed me, again and again, was this. My greatest enemy was not other traders. It was not the operators who manipulated prices. It was not bad information or bad timing. My greatest enemy was the way I felt when money was on the line. Hope, that is the word. Hope is the most dangerous emotion a trader possesses, not fear. Fear can protect you. Fear will make you exit a bad trade, even if it hurts. But hope will make you stay. Hope will convince you that the market is wrong and you are right. Hope will let a small loss grow into a large one. Hope will hold you in a position long after the position has told you everything you need to know. I broke my own rule against hope more times than I can count. Every time it cost me. And the worst part is I knew. I knew while it was happening. I could feel myself choosing the story I wanted to believe over the truth the tape was showing me. That is the most human thing about trading. You can know exactly what you should do and still be unable to do it. Let me tell you about 1907, the Knickerbocker crisis, the year the entire American banking system almost collapsed. I was 29 years old. I had been through multiple bankruptcies by then. I had made money and made it back and lost it again more times than I could keep track of. But something was different in 1907. I could feel it in the tape. Something underneath the prices was wrong, the kind of wrong that doesn't announce itself. The kind that builds quietly for months, invisible to everyone who isn't watching closely enough. I shorted the market, heavily. Everyone thought I was insane. Markets had been rising. The economy was growing. The newspapers were optimistic. Respected men told me I was making a catastrophic mistake. The panic arrived in October. Banks started failing. Credit froze. Stocks collapsed. And I made $3 million in the chaos. $3 million. In 1907, I was 29 years old, and I was one of the wealthiest men in America. And then I lost almost all of it within a year. Not because of the market, because of cotton. Because a man named Percy Thomas came to me with a story about cotton prices, and he told it so well, and I wanted to believe it so badly, that I let myself be persuaded against everything I knew. I took an enormous position in cotton based on someone else's thesis. I ignored the tape. I ignored my own rules. I listened to a human being instead of the market. Percy Thomas was one of the most charming, persuasive, intelligent men I ever met. He was also completely wrong, and I paid for his wrongness with everything I had made in 1907. This is the lesson I want you to understand more than any other lesson I will ever teach you. Tips are poison, not because the information is always bad. Sometimes it is good information. But because the moment you act on someone else's thinking, you have abandoned your own system. You are no longer trading a setup, you are trading a story. And stories do not have stop losses. When you have your own system, and the trade goes wrong, you exit at your level, and you move on. When you have borrowed someone else's conviction, and the trade goes wrong, you have nothing to fall back on. You hold because you still believe in the story. You give it more time because the story hasn't changed. You average down because the story feels true. And the market does not care about the story. The market only cares about the price. I rebuilt again. I always rebuilt. That was both my greatest strength and the thing that made my destruction more complete each time. Because a man who knows he can rebuild is a man who is capable of taking risks that should terrify him. By 1929, I had been studying markets for 30 years. I had seen panics and booms and crashes and recoveries. I had watched men make fortunes in bull markets and give them all back when the tide turned. I had developed a system of rules that I believed in completely. Rules about timing, about confirmation, about the line of least resistance, about cutting losses and letting winners run. And I could feel, in the months leading up to October 1929, the same thing I had felt in 1907, only bigger, much bigger. The market in 1929 was not just overvalued, it was insane. Ordinary Americans were borrowing money to buy stocks with no understanding of what they owned. Shoeshine boys were giving tips on RCA shares. Banks were lending against stocks at margins that made no mathematical sense. The entire country had convinced itself that the market would go up forever. When everyone believes something will go up forever, it is time to check the tape. I started building my short position slowly, carefully. I tested the market the way I always tested it. Small positions first, watching how the tape responded, adding only when the evidence confirmed my thesis. I was not guessing, I was reading, and then October came. I will not describe those days in great detail because you have read about them. What I will tell you is what it felt like from where I was sitting. It felt like standing on the shore watching a tidal wave that had been building for 2 years finally arrive. It was not triumphant. It was not exciting. It was almost quiet. Because when you have been right about something terrible, there is no joy in the being right. There is only the weight of watching it happen. I made $100 million in 1929, and then I broke my rules. Not all at once. That is how it always happens. Not in one catastrophic decision, but in a series of small surrenders that seem reasonable in the moment. I started listening to people. I let my wife Dottie influence my trading decisions. I gave money to people who had ideas and no track record. I strayed outside the markets I understood. I traded with my heart instead of my system. By 1934, I was bankrupt again. The fourth time, $100 million. Gone. When you have been broke 4 times, you develop a relationship with failure that most people never understand. The first time, bankruptcy feels like the end of the world. The second time, it feels like a terrible mistake. The third time, it begins to feel like a pattern. But the fourth time, after you have made more money in a single day than most men make in 100 lifetimes, the fourth time is something different. The fourth time, bankruptcy stops being a financial condition and starts being a mirror. And what I saw in that mirror was the truth I had been running from my entire trading life. Knowledge is not enough. Rules are not enough. System is not enough. All of those things are only as powerful as the discipline to follow them in the moments when every emotion you possess is screaming at you to do something else. I knew how to trade. I had known how to trade since I was 15 years old. The tape spoke to me. Market rhythms made sense to me in ways they never made sense to most men. I was not lacking in talent or knowledge or experience or even in the rules themselves. I was lacking in the one thing the market demands above everything else: obedience. Not obedience to another person, not obedience to a guru or a system you copied from someone else. Obedience to your own tested principles. Obedience to what you have learned, paid for with real losses, and committed to in writing when you were thinking clearly. So that when the moment comes, and the emotion arrives, and the story sounds so convincing, you can look at what you wrote down and follow it. I have told traders this my entire life. The market beats you not when you are ignorant. The market beats you when you are right and you know it, and you still cannot make yourself act on what you know. There is something I call the pivotal point. It is the moment in a stock's movement or in a market's movement when what comes next becomes clear to anyone watching closely enough. Not predictable, not certain, but clear. The weight of evidence points in one direction. The tape confirms it. Every piece of your system says the same thing. Most traders miss the pivotal point not because they cannot see it, they miss it because they cannot believe it. The move looks too obvious. They think they must be wrong because if this were really the setup, surely everyone would see it. So they hesitate. They look for one more confirmation. They wait until the move is already underway and the best of it has passed, and then they chase. Chasing is how most traders die. Not suddenly, but slowly, trade by trade, giving a little more to the market each time because they entered late and tried to recover by holding longer than they should have. The great paradox of trading is this: the clearest signals arrive exactly when they are hardest to act on. In 1929, every piece of evidence I had was telling me the same thing. But I was the only man in my circle who believed it. My brokers were uncertain. My friends were committed to the bull case. The newspapers were optimistic. The smartest men I knew were long and loading up. And I shorted. Because the tape said to. Because my system said to. Because I had learned, through 30 years of painful education, to trust what the market shows me over what the people around me believe. That is the skill that made me $100 million in a day, and it is exactly the skill I abandoned in the years that followed. Here is the brutal truth about this business that nobody will frame on their wall or sell in a course. You can know everything and still lose everything. You can be right about the market and wrong about yourself. You can build a system that works perfectly and then walk away from it the moment it matters most. The market does not care how smart you are. It does not give credit for good intentions. It does not remember what you made last year. It only asks what you are doing right now. And if what you are doing right now violates the principles you know to be true, it will take from you without hesitation. I have been asked thousands of times what my greatest mistake was. People expect me to name a trade, a position that went wrong, a market I misread. But my greatest mistake was never a trade. My greatest mistake was forgetting who I was when I walked away from the market. My greatest mistake was allowing the identity I built in the markets, in the state, disciplined, unemotional, systematic, patient, to stay in the market, while the rest of me lived a different way. You cannot separate your trading self from your whole self forever. Eventually, the habits of the man bleed into the habits of the trader. And if the man is undisciplined, if the man spends freely, trusts carelessly, acts on emotion, ignores warning signs, that man will eventually sit down at the tape and trade like himself. That is the lesson I paid 4 bankruptcies to learn. The market is a mirror. It shows you who you are, not who you want to be. Not who you are in your best moments or in the stories you tell about yourself at dinner. Who you are when the pressure is real and the money is on the line, and the story you're telling yourself is the only thing standing between you and the exit. Trade long enough and honestly enough, and the market will show you yourself so clearly it becomes almost unbearable. I want to leave you with the rules, not just suggestions, as the things I wish I had tattooed to the back of my hands so I could see them every time I reached for the telephone to place an order. Never act on a tip. Never, no matter who gives it, no matter how good it sounds, no matter how many times they have been right before. The moment you act on someone else's conviction, you have abandoned your own system. And a system you abandon when tested is not a system at all. Never add to a losing position. A losing position is the market telling you something. When the market speaks, listen. Adding to a loss is arguing with what you know to be true. The market will win that argument every single time. Never let hope replace judgment. Hope is a beautiful thing in every other part of life. In trading, it is a slow poison. When you find yourself hoping a trade will turn around, that is not patience. That is the beginning of a much larger loss. Always cut losses quickly and let profits run. This sounds like common sense. It is the opposite of what emotion wants you to do. Emotion wants to take the profit now, before it disappears. Emotion wants to hold the loss a little longer because the story still sounds true. You must do the opposite of what emotion demands every single time. And finally, do nothing when there is nothing to do. This is the hardest rule of all. The market does not owe you a trade today. It does not owe you a setup or a signal or a reason to be active. Sometimes the right position is cash. Sometimes the line of least resistance is patience. The men who lose because they could not sit still have donated more to the market than every other category of loser combined. I made $100 million in a day. I ended my life in a cloakroom of the Sherry Netherland Hotel on November 28, 1940, with nothing left of the fortune. People have spent 80 years trying to understand that ending, trying to reconcile the genius with the failure, trying to find the moment where it all went wrong. But there was no single moment. There were 1,000 moments, 1,000 small choices to ignore a rule, 1,000 small surrenders to hope or pride or the sound of a convincing story. 1,000 times I chose what I wanted to believe over what the tape was showing me. That is the truth they do not put in the textbooks, not the trades, not the tactics, not the technical analysis. The truth is that this business does not destroy you in a single day. It finds the cracks in your discipline, and it widens them slowly, patiently, over years. And if you are not watching for those cracks, if you are not honest with yourself about where your discipline is weakening and why, the market will eventually find them before you do. You are not fighting price movements. You are not fighting other traders. You are not fighting the operators or the institutions or the Federal Reserve. You are fighting yourself every single day, every single trade. Win that fight and the market will take care of the rest. That is all I ever learned that mattered. That is the education that cost me 4 fortunes and 1 lifetime. Now go back to your charts. Not to look for the next setup. Look for yourself in them. Look for the places where you are substituting hope for judgment. Look for the positions you are holding past their natural exit because the story still sounds good. Look for the trades you are forcing because you cannot stand being flat. Look for the rule you know and keep choosing to ignore. Find those things, fix those things, and you will do better than 90% of the traders who sit where you sit right now. The tape doesn't lie, neither does the mirror.
That's one hell of a great story. There are several lessons we can take away from Livermore's success and failures. What is one big success or failure you have experienced? Leave it in the comments below, and I will see you in the next video.